Hello, everyone, and welcome to another edition of the Forex Technical Market Update for September 1st, 2015. Yes, we're on the final stretch of the year, this final third of the year, and this is definitely, traditionally, this is the time where we see the most volatility in the markets between September and December. Also, between January and March can be very volatile also, and we can see a lot of price movements. Okay, so what is happening here? We see some recovery in the euro, and the market is up on the morning at 112.60. Now, this market is still in no man's land. It can really go anywhere. We can rally from here and take out these highs, and that is in keeping with the breakout scenario, or we could head back to the downside on the euro. As I said, it's in no man's land at this point in time, because this could be the beginning of a new trend, new uptrend, or a new retracement of this larger move down that occurred last year, or we could be in a position where we'll continue the move to the downside. Okay, and for clues as to what's happening in the euro, it's good to look at the US dollar index. And as you can see, the market last week bounced off of support in this 92.60 region. The market came back down, and that's why we had that huge bounce, because the market did not take out these lows on the US dollar index. So we're looking to see how the market reacts again to this low if we get another descent down to this 92.60 level. So this is very critical support on the US dollar index. It's always good to take a look at the dollar index to see what the currencies are doing when put together. Okay, taking a look at the Japanese yen, the market yen is up on the morning, and looking at the S&P 500 futures, we see that the market is down, and the Dow futures, just before I started recording, was down about 300 points, and the Japanese yen just looks to be mirroring what the stock market is essentially doing. So the Japanese yen is up on the morning, and support is down at this 118 level, and resistance is at 121.75. Remember, after a huge drop like this, we could get a period of indecision in the market. The markets may not necessarily take out this low at 116.20, and may not necessarily take out the high. And you could be in a period for a while where the market moves sideways and it's very choppy. That happens quite a bit after huge drops in the markets. Taking a look at the Canadian dollar, market continues to hold above that 130 level. Actually, this is a new month, so what we saw was that the market did close above that 130 level. And interestingly enough, the market, this candlestick pattern is a doji pattern. So if we do close back down this month, this may be a false break where it breaks out and then closes right back down. And if that happens, we could see a pretty strong retracement in the Canadian dollar. If it does not happen and we close the month above 133.53, that will be fairly good for the US dollar bulls in this market. Okay, so back to the daily chart. We're up on the morning. We have support at this 130 level, and resistance is up at 133.49. Taking a look at the British pound, we're still flirting with support. The market traded down to support in this 153.50 region. And let me just draw a line. The market is forming a doji, where market briefly went down below the level and went right back up. Looking at the 15-minute chart, we see that the market went down to 153.10 and is coming back up as we speak. Now, the market doesn't necessarily have to find support at this level. We could see further losses, and a close below 153 will open up the 152, this swing low here at 152. If the market does form a doji, and we could see a rally in this market. So we're at critical support, as is often the case with the British pound. It likes to test support and resistance, and even pierce support briefly, or pierce resistance briefly. That's definitely how the British pound trades. Now, before I move on, we have a question I get is the importance of market analysis. Remember, market analysis, when we are doing technical analysis, all we're doing is looking to see what could happen in the market. We're not saying definitively this will happen or definitively that will happen. We're not essentially trying to predict the market. We're just trying to see what the market is doing and the probabilities that it may do something else. And that's the whole point of technical analysis. Because I'm the first to tell you that no one can really consistently predict what this market is going to do. And anyone who tells you that is full of BS. What we can do is analyze the markets and give educated analysis as to what may happen in the markets. And that's why when you're trading, you use proper risk management and you use stop losses, so that if you put on a trade, you will not lose all of your money. Because in the markets, it's not unusual to put on 4 or 5 trades in a row that don't go with you. That is real world trading. That is what we see in the real world. I know a lot of marketing out there that's surrounding Forex especially. Yes, you see it in the stock market also, but Forex especially makes it seem that there are systems out there that are never wrong, and you can just get 90, 100 pips consistently every day. And I can tell you those systems do not exist, only in marketers' dreams. So the whole point of market analysis is to give educated guesses essentially as to what the market may do. And it's very important that you practice proper risk management in the markets. Okay, so as I said earlier, we are coming up on the high point in the markets. If you are thinking about the signals, yes, we have had a volatile run over the last couple of weeks, but definitely the markets are showing that we could start to see some trends emerge again, and that's where all the money is made. So if you would like to take the signals, click on the link below this video to get started. And just a note about the signals: if the signals are designed for long-term growth in a portfolio, and they're not designed for you to just stay in 2 weeks and make a quick money and then you're out, that is not really investing. And the signals, I can tell you no, the signals are not designed for that. When you take the signals, you are essentially copying our trades, and you are essentially getting a portfolio of currencies that over the long term, we are saying that you should see gains in your account, and it's more of a longer term play. And when I mean longer term play, 3, 6, 9, 12 months, that's how you gauge the quality of the signal. So if you're just in for 2-3 weeks, I can just tell you right now, it makes no sense. So if you would like to have something, we're looking to build relationships with people and give them an alternative to what is out there. Okay, so if you'd like the signals, click on the link below this video, and I hope you have a wonderful day. Thank you.